Welcome to Growth Investing Mastery. This video will look at Silicon Motion's Q2 2026 earnings. As a reminder, this channel is not investment advice or recommendations. All the content here is just my opinion, and the channel is completely independent. The purpose of this video is to look at the company Silicon Motion with stock symbol SIMO and how they overperformed on Q2 2026 earnings. The conference call was on July 30th, and I will look at where numbers landed versus the guidance and discuss the upcoming Q3 guide. Additionally, I will examine the narrative from the earnings transcript and discuss the commentary around Silicon Motion's product growth. Let's take a look at the guidance that Silicon Motion gave for Q2, along with where the company actually landed. Silicon Motion previously guided Q2 revenue to be from $393 to $411 million. At the top end of that range, the revenue metric would be up 20% quarter over quarter and up 107% year over year. Analysts expected $404 million of revenue in Q2, and I was looking for the company to get a minimum of $435 million of revenue to be interested in continuing to hold the stock. The actual Q2 revenue landed at $451 million, which is up 32% quarter over quarter and up an impressive 127% year over year. GAAP gross margin for Q2 was guided from 48.5% to 49.5%. I was looking for 50% gross margin and it landed at 50.2%. Adjusted operating margin was guided from 21% to 22%. The company beat that metric as well, landing at 23.1% for adjusted operating margin. On GAAP EPS, analysts were looking for $2.04. I wanted to see this number come in at $2.30, and it landed all the way at $3.99. But the company did have a $74.7 million investment gain in the quarter, which looks like a one-time gain. I didn't track down what that investment gain was related to, but either way, it's a good sign. For the next quarter, Q3, analysts were looking for Silicon Motion to guide to around $432 million of revenue. And I thought Silicon Motion could guide all the way up to $510 million or more in revenue. I was optimistic they could land a high revenue guidance number, even though it's well above the analyst estimates. The Q3 revenue guidance landed all the way up at $519 to $541 million of revenue. The top end of this guide would be up 20% quarter over quarter and up 124% year over year. Additionally, the company has a recent history of beating their guidance, so a more realistic revenue number might be something like $570 or $580. The company guided Q3 adjusted operating margin from a range of 27.5% to 28.5%, and that's a pretty big step up from the 21.3% adjusted operating margin they got this quarter. This shows how the company is getting more profitable each quarter. Lastly, GAAP gross margin was guided from 49.9% to 50.9%, as the product mix includes higher margin products. Let's now take a look at the press release commentary and the associated slides. The press release detailed how SSD controller sales were up 5 to 10% quarter over quarter and up 50 to 55% year over year. This segment includes the consumer side of the business, which is growing the slowest. For eMMC and UFS controller sales, they were up 15 to 20% quarter over quarter and up 95 to 100% year over year. Ferry and boot drive solution sales were up 110 to 115% quarter over quarter and 1,690 to 1,695% year over year. And I wrote here that's great news on the Ferry and the boot drive sales. This is the segment I was looking for the overperformance in, as it's where Silicon Motion is selling to companies like NVIDIA and Google. The press release detailed how the company is seeing a shift from being a consumer-faced NAND flash controller maker, and now they're a more diversified leader in controller and storage solutions. That includes AI infrastructure and edge solutions. Management said there was exceptional growth in revenue, gross margin, and operating margin. And there's rapidly growing storage solutions in Ferry Automotive and enterprise boot drives. They said it was a record-breaking start to the year and expect momentum in the business to continue in the second half. There's ongoing product and market expansion. It's a resilient platform, and there's sustainable and profitable growth for years, is how the management described their business. The company's slides for Q2 showed significant new products ramping up, and these products were along a lot of different lines of business. For example, in SSD, they have the industry's first 6 nanometer controller. And in eMMC and UFS, they're shipping to all Android handset OEMs. For that same market, they're diversifying in high-volume markets for smart glasses and gaming platforms as well. The slides mentioned that MonTitan was sampled at over a dozen target customers, and volume production ramps continue in Q2. Additionally, MonTitan will see sales begin in the second half with 3 Asian Tier 1 customers. That's in addition to 2 Tier 1 US-based customers. And they talked about how there was an expanding relationship with a customer that was implied to be NVIDIA in the second half for the next generation platform. Let's now take a look at the earnings transcript details. The CEO, Wallace Koo, started with prepared remarks, and he detailed how the company is seeing continued growth across all our core markets. Q2 began the initial commercial ramp of the MonTitan Enterprise SSD products. And one direct quote was, "Our competitive position keeps strengthening," as the company expects full year 2026 revenue growth above 100%. The CEO said it's the right product in the right market at the right time, and later he called it an AI supercycle. He detailed how the company has never been better positioned to capitalize on the accelerating demand for intelligent storage from the data center to the edge. It was mentioned that the low end of the smartphone and PC market is being pressured by higher prices right now. Another quote regarding memory was, "We expect this scarcity to persist, likely until 2028, and that's when the new fabs come online for most memory companies." It was mentioned the NAND environment will stay challenging through 2028, but the company has a clear path to deliver significant top and bottom line growth. There's accelerating demand for next generation storage, and the embedded eMMC and UFS market continues to thrive and grow significantly. The CEO said our performance was driven primarily by market share gains as NAND makers de-emphasize these solutions. Continuing on with details from the earnings transcript, OEMs are trimming specification to offset some of the rising cost of memory, and Silicon Motion expects smartphone unit volume to be down 10 to 15% in 2026. But despite that decline in the overall smartphone market, the company said we anticipate strong growth in our mobile business in 2026. There's continued market share gains and average selling price improvement. The ASP increase is from the mix shift to the new UFS controllers, and the eMMC related products are winning across a range of end markets. These include automotive, smart glasses, watches, drones, robots, next generation cable set-top boxes, smart TVs, and even more, they said. Another direct quote from the CEO. He said the company is operating in an environment of stronger pricing power and profitability. There was a discussion how the SSD business improved significantly in the second quarter, and the investments the company made in PCIe 5 controllers at the edge is starting to pay off. They have what they call a 4-channel controller, and it's ramping steadily now. However, the CEO did mention here the transition from PCIe 4 to PCIe 5 is proceeding more slowly than anticipated 6 months ago. OEMs are looking to reduce the overall bill of material, as it's called. However, the transcript detailed how the company is securing meaningful share in this market. They're getting customers which include NAND makers and module manufacturers with leading controllers. Silicon Motion's controllers are continuing to gain share in the mid to high-end segment of the PC market, and the company further expects to increase their Edge SSD average selling price as they're progressing through the remainder of the year. Regarding the MonTitan SSD product, the CEO detailed how the company has entered commercial production in the second quarter with 2 Tier 1s, and I believe he's talking about NVIDIA and Google here. Let's continue looking at more details of the earnings call transcript. One direct quote was, "We expect to ramp 5 additional Tier 1 customers in the second half." And that was regarding their Titan product. And I wrote here, wow, they already got NVIDIA and Google as Tier 1s, and they just landed 5 additional more Tier 1s. So it sounds like they're getting their foothold in with a lot of different hyperscalers or other large companies. And the Titan product line is off to an exceptionally strong start. And that's after several years of investment in enterprise AI cloud controllers. And my take here is their R&D is really starting to pay off now. There's a very big return on their investment they made years ago. The transcript continued to detail how Titan is well positioned for rapid growth. They have solutions that address low latency near the GPU and near the CPU key value cache. Several customers are now leveraging Titan to target this market. Another direct quote was, "They'll be ramping production throughout the remainder of the year." On the technical side, the CEO detailed how the 1 terabyte SSD is leveraging QLC NAND and remains a large TAM for Titan. This 1 terabyte SSD solution will begin its initial ramp in the second half of the year with multiple customers. The transcript detailed how NAND makers are exiting the automotive market as they don't have the certifications or the expertise. And Silicon Motion has developed an automotive product and certification for over a decade now. There was a discussion of the emerging robotic market, and the company is now actively engaged with multiple companies in robotics that want controllers. There's multiple opportunities in the emerging physical AI market. This includes humanoids, vision systems, LiDAR, compute, storage, balance systems, and others. Continuing on with details from the earnings transcript, the company said the opportunity in robotics may be larger than in automotive, and the company's Fairy solution is positioned well. Silicon Motion's boot drive is called a unique DRAM-less technology. It offers enhanced security as well. The CEO detailed how competitors are not likely to dedicate R&D to this market, for it's a comparatively low volume market. A competitor would need the right technical know-how. While Silicon Motion currently has the leading controller and firmware technology, and they're winning in the market right now, we're just getting started, the CEO said. Later, he added the company executed across our rapidly diversifying business, and he concluded by saying we will deliver broad-based sustainable growth across our business in 2026. The CFO, Jason Tsai, gave prepared remarks as well. He said the second quarter performance was even stronger than expected. Some of the more impressive financials included Q2 revenue of $451 million, which was above the high end of the guidance range of $393 to $411 million. And the next revenue guidance for Q3 was a big step up as well, at $519 to $541 million. The landed Q2 revenue growth was up 32% quarter over quarter and 127% year over year. Operating margin came in at 23.1% versus a guided range of 21 to 22%. Even more impressively for Q3, operating margin is projected to go up to 27.5 to 28.5%, and gross margin is going up as well to 50 to 51%. And the CFO talked about how gross margin is being boosted by product mix of Titan and PCIe 5 controllers. The company is investing heavily in R&D, and the CFO talked about how operating margins can exceed 30% exiting this year. Let's continue looking at the CFO's prepared remarks, followed by the question and answer session. The CFO detailed how multi-year investments in enterprise and AI SSDs are starting to pay off, as the diversification strategy beyond consumer is yielding outsized results. There's better visibility and longer product cycles, both of which are good for Silicon Motion. And there's much higher barriers to entry for their markets now. These factors ensure strong long-term revenue and profitability growth. And lastly, the CFO mentioned how visibility and predictability will further improve significantly. Moving on to the Q&A section. One analyst mentioned how there was a bigger contribution from Ferry than they modeled or expected. The CFO answered more generally that they're seeing very strong contributions across all of the SSD solution products. Another analyst was asking about the 2 terabyte QLC solution. The CEO called this the great darling of the industry, but he said this market is delayed by NAND capacity. And that comment gave me greater insight into the NAND demand and supply dynamics. So once more NAND supply comes online, it will likely be used first by higher volume storage products. Later in the Q&A, management gave details how MonTitan controllers are margin accretive, and that the back half of the year benefits from growth in PCIe 5 controllers. Those PCIe 5 controllers are also margin accretive. There was a question about the phone market for Silicon Motion, and the management detailed how the Chinese smartphone market is very challenging right now due to the price increases. On the topic of NVIDIA and supplying boot drives to NVIDIA, management said they have a pretty large share for Bluefield Supply boot drives. And keeping in mind there's 2 other competitors here selling to NVIDIA for boot drives. Describing the boot drive, management said it is going to grow very strong. And not just through one customer, there's broad growth. Let's look at some last additional details from the Q&A session. One direct quote from management was, "We believe next year we're going to ramp much more revenue growth than this year." And they talked about how PCIe 6 has much broader design wins. Before we even tape out, they said. So it sounds like the production ramp up for PCIe 6 is coming along a lot faster than PCIe 5 did. The CEO said they do not have enough R&D to address all the potential products they could make. And keeping in mind the company spent $105 million on R&D expenses in the quarter, which is a lot for a company of their size. They detailed how the boot drive business has a very wide range opportunity, as NVIDIA and Google are favoring DRAM-less boot drives because they cost less. Silicon Motion's boot drives offer specific security support, and performance is very good, they said. The CEO detailed how the boot drive number per server rack is huge, as he called it. There's more than 30 or 40 per server rack, depending on the type of server rack. And he added how the scale-up is not only for the number of boot drives, but capacity may be increased in the next few years as well. And the management detailed how they do not see more competitors coming into the boot drive sector of the business. Currently, more than a dozen Tier 1 customers are waiting for the MonTitan PCIe Generation 6 sample product. The ramp for PCIe 6 will be much stronger and faster, quicker than our PCIe Gen 5. The company discussed drone volumes ramping up ahead of robot volume later on. In robotics, the company expects to have multiple solutions per robot, but that production ramp-up is much later in robotics as they called out 2029 and 2030. Let's have a look at my final thoughts on the Q2 2026 earnings for Silicon Motion. My big takeaway is that management is clearly communicating the growth in the business. Many product lines seem to be ramping in volume for the second half of 2026. And it's good to see the confirmation of the continued strong ramp into the second half. Overall, I thought it was a great quarter with excellent financials and guidance. And the company's roughly $8 billion market cap, with revenue going above $540 million soon, seems like a good value. It's worth keeping in mind that Taiwan-based stocks typically trade below valuations of US and Chinese peers. The company is paying a dividend in August, and this demonstrates the inherent profitability of Silicon Motion. And my actions regarding the stock. I added to my position before the report, and I trimmed slightly on the price rise after the results landed. I'll have more portfolio updates on my monthly portfolio summary coming up soon. This concludes the video on Silicon Motion's Q2 2026 earnings. And let me know what you thought of the video or if you have any feedback on the content here. As a last reminder, this video is not investment advice or recommendations. The content here is just my opinion, and the channel is completely independent. Thank you for taking the time to listen.